Now we're getting into the really good stuff, the exciting stuff, which is financial management so you can increase your profits and grow your business. This section is going to talk about the financial statements, what they are, what they mean, how to use them, why they're so important, why everyone cares, and everything in between. This is a really important section because a lot of business owners feel intimidated a lot of times by the financial statements, and then they just try to ignore them or use their gut intuition to make decisions, and that's not what we want you to do. We want you to feel empowered and that this is something that you know enough to be dangerous about, and that you're not going to hide from your numbers. You're going to understand your numbers. You're going to use them. You're going to grow your business. You're going to reach your long and short-term goals. All good stuff. So that's what we're going to cover here. So let's go ahead and dive right in. So what are the financial statements and why is it important, right? So why is it important to understand your financial statements? Well, right here is an excellent description. So let's read through it. An understanding of your accounting principles is vital for effective financial management. This section is going to introduce small business owners, hopefully like yourself, to accounting fundamentals, providing grounding in recording, analyzing, and interpreting economic transactions. That's what this is all about. It makes really clear what the critical components of the financial statements are, the balance sheet, income statement, and cash flow statement, and explains how to use these documents and why they can offer invaluable financial insights into your business's economic health. When you get a firm grasp of these concepts, you're going to feel so much better about where your business is and where it's going, and you're going to be able to increase your profitability. A quick note here, accounting is often called the language of business because it provides a critical information about a company's financial activities and health. That's the truth. You have to understand your accounting because everyone else, when they talk about your business, is going to be talking the language of accounting. So you want to be fluent in it, and that's what we're going to work towards here today. So we're going to discuss the basics of accounting and financial statements that every financial or business owner needs to know. So what we want to do is start with the fundamentals of accounting. The first thing we want to do is start with the fundamentals of accounting. And at its core, accounting involves recording, summarizing, and analyzing your financial transactions. These transactions are then used to prepare your financial statements that offer insights into your business's performance and financial position. Where are you at? Where are you going? That's what it's going to tell us. The process is governed by a set of rules that are generally known as GAAP, the Generally Accepted Accounting Principles in the U.S., or other standards like the International Financial Reporting Standards, IFRS, outside the U.S. And it comes down to a system that's built on double entry bookkeeping. What's that mean? Well, this system is the heart of accounting where every transaction is recorded in at least two accounts, a debit in one account and a credit in another, to ensure the accounting equation assets equals liabilities plus equity always remains balanced, hence the balance sheet. The key financial statements that you need to know are the balance sheet, the P&L, and the cash flow statement. So first we're going to start with the balance sheet. And okay, what is it? The balance sheet provides a snapshot of a company's financial position at a specific point in time. It lists the company's assets, what it owns, liabilities, what it owes, and equity, the owner's share. Understanding the balance sheet is crucial for assessing the company's stability, liquidity, and financial flexibility. Okay, so what are assets? These are divided into current assets, cash, inventory, receivables, and non-current assets such as property and equipment. Liabilities, these include current liabilities, debts that are due within a year, and long-term liabilities, debts owing after a year. And then equity, the remaining piece, represents the owner's claim on the assets after settling all liabilities. Number 2 is the income statement, or the P&L, the profit and loss. The income statement shows your company's revenues, expenses, and profits over a specific period. This helps owners evaluate the company's profitability, operational efficiency, and prospects for future growth. So here you have your revenues, expenses, and net income. The revenues are the total income earned from normal business activities. Expenses are the costs incurred in generating revenue, including cost of goods sold, operating expenses, and taxes. And net income is the difference between revenues and expenses that indicates profit or loss. And number 3, the final one, is the cash flow statement. This statement tracks the cash flow in and out of the business, offering insight into the company's liquidity and long-term solvency. It is characterized into cash flow from operating, investing, and financing activities. An operating activity is where you see cash generated or spent on regular business operations. Investing activities are where you have cash used for or generated from the purchase and sale of assets. And financing activities is cash received from or repaid to investors and creditors. Okay, so why are these financial statements so important, and why is it important for you to understand them? When you understand your financial statements, this allows business owners like you to perform financial analysis, which can then reveal trends, opportunities, and potential threats to your business. When you do ratio analysis, for example, this can provide insights into the company's efficiency, liquidity, profitability, and solvency. When we talked about having metrics and KPIs, these ratios are typically an example of what you'll include. And while there are many ratios, you only want to find the ones that really matter. And we can talk about that later or in the previous sections, but you just want to figure out what ratios tell you how healthy your business is or isn't. And these are things that you can track daily, weekly, monthly. So in conclusion, a firm understanding of accounting principles and financial statements will empower small business owners to make informed decisions, plan strategically, and communicate more effectively with financial professionals. When you keep accurate records and you regularly review financial statements, owners can monitor the business's performance, identify areas for improvement, and enhance overall profitability. And that's what we're here to do, right?